Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at Bitcoin once again through the lens of the various time frames and make an assessment exactly of the direction of travel for the short, medium and the longer term. I'll also have a look at on the shorter term time frame to see exactly where we're at currently. I'll also be making a personal announcement at the end of this video. But before we begin, just the usual disclaimer. Please remember, all my videos are always for educational purposes. Nothing should be taken as financial advice. So please do your wider research before you make any investment decisions. So with that out of the way, I'm going to start off by looking at the daily chart. As you can see here, a lot of interesting developments going on in this part of the chart. So obviously we've topped out here at 69,000. We've made this run down in the price all the way down to the 32,900 down here. And in the last 5 or 6 months, we've basically been going into this channel that we've created. And as many of you will know, this is a rising channel, which is obviously a bear flag. And usually for a bear flag on a downward trajectory here, it should break to the downside as it's a continuation pattern. And within this channel here and the price action, over the last many months, we've been looking at 3 well-defined support and resistance levels. And those levels are the $40,000 mark here, the $42,500 mark here, and the $45,500, $46,000 mark at this level here. So that's the template on which the Bitcoin price seems to be weaving itself in the last many months. But before we have a micro analysis of this pattern here, we'll run down the various time frames to see exactly what the bigger picture is first. Okay, we'll start off with the monthly chart, and on the chart I've got here is 2 simple moving averages. The 21 and the white one here is the 50 simple moving average. Currently, as you can see, we're finding very good strong support on the 21 simple moving average here. And the reason why I've got the 50 down here is because, as you can see, we've found support historically on this in the past. And should we fall below this 21 simple moving average on the monthly chart, we would find very strong support at these levels here at around about the $20,000 mark. And if I put the 8 exponential moving average, we can see quite clearly here that we've been operating between these 2 moving averages, the 8 exponential moving average, the blue line, and the 21 simple moving average here where we found support. So sooner or later we're going to have to break in between these 2 lines. And the million-dollar question is, will we break to the upside or the downside? And it'll all depend on your narrative, whether we've actually topped out here at 69,000, and if we believe that we're in this 12-month bear market, in which case, more than likely, it's going to break to the downside and find support somewhere down here over the next few months. Or if your narrative is that we're still going to have this blow-off top that we had back in 2017, then we should break to the upside, break above the previous high to much higher levels, and only time will tell which will play out. And as I've shown you previously, historically, once we top out and break below this 8 EMA here, we tend to spend around about a year at least in a sideways action here. And this was back in 2011. Then at the end of the first cycle here in 2013, once we broke down, as we can see here, spent a long time below it before we broke up. And again in 2017, once we broke down below the 8 EMA, we spent another year or just over before we went into the next bull run here. So this is why this is really critical. Now that we've broken below it, history would say that we're more likely to break down and find support on this 50 moving average here. Just like back in 2018 and in 2015 and even in 2012 here. What confuses the picture currently, and this is why everybody's very uncertain in terms of what could happen, is that this current cycle is actually very different to what we had over here and over here. The main difference being, obviously, we had a blow-off top here at the end of 2013, a blow-off top here at the end of 2017, but we've had no blow-off top here. Also, we only had one top here before we went into a bear market. In 2017, once again, we only had one top before we went into the bear market. Currently, in this cycle, we've had 2 tops. So we've double topped here at 64 and 69, creating a confusion as to whether we're in a bear market or we're going to be going up for a blow-off top like previously here. And as you know, my view is that we have topped off and that we're in a 12-month bear market. So my narrative is really biased towards the downside from my own understanding of this. And of course, I could be completely wrong. But interestingly, you might notice that whenever the blue line and the yellow line start squeezing together, we tend to get a big move. Here we got the move to the downside. Once we squeezed here again, the move was to the upside. Once again here in 2018, the two lines started to squeeze together and we moved to the downside. And once again, we're squeezing these two lines together. And the question is, which way will the price go? And as you know, there is no certainties or guarantees in any money markets. And I've said many times, it's all about probabilities. And I would suggest the probabilities in this case here would be 60-40 to the downside. Moving on to the weekly chart, the most important moving average here is the 21 weekly exponential moving average, the yellow line here. And currently we find ourselves well below it. We made an attempt to get above it here, but it turned out to be a failed rally over here and we've come all the way straight down again. But once we do go below, we do tend to spend quite a lot of time down here. So the question is, are we going to spend more time down here? Only time will tell, but history suggests that once we do break below it, we do tend to spend a period of time. These are the two last few times that we've done this. Which brings us to the daily chart here. And if we have a look at this action here a bit closer, since we bottomed out here at 32,900, we basically come to the bottom of this channel, to the top, down to the bottom, near the top once again here, and to the bottom and the top recently. And now we're at the bottom here. And the expectation would have been that we would have had another rally here, at least to around about these levels here, around 45, 46. And if you watched my last video, I was expecting a price to come to around about the 44,700 mark, around these levels here, which didn't materialize. And we've ended up with a failed rally here. However, what it's done is it's created a lower high from the previous high that we had at the 48,300. And that gives us a trend line, that is this one here, which is a line that's going to be difficult to break through. And this will be a resistant point if the price comes back up towards these levels here. But at least we know that there is a resistant diagonal trend line here. And also on the support side, we can see that it's formed lower lows here. And there is a support line over here as well. So we're currently within this upward bear flag that we've got. We've also got within it this bullish wedge, which should break to the upside. So it may well be that we come to where we are now, come back down to find support here, and then break to the upside. And we may well have another rally here in the next few weeks. Only time will tell. And the reason why I've got these green lines is, if we have a quick closer look at this point here, if we do a Fibonacci retracement measure here from the top at that 43,000 we just went up to on the 21st of April, to the bottom here, where we just bottomed out yesterday at 38,200, we can see that the first line here, the green line, is the 50% Fibonacci retracement level. And we've come up to here and found resistance right on it, as you can see here. And currently we're finding it here as well. And it's finding it difficult to get above it. But once we do break above it, I would expect it to come up to the 61.8 level here. If I move this to the left so we can see it clearer. If I can move it to the left here so that the figures are clearer. So the 61.8 levels, so the Fibonacci golden pocket levels are basically 41,100 to 41,300. So this is where I would expect the price to possibly turn around from. And if we get to this point here in the next few days, then this diagonal line will also provide confluence of resistance here. We'll wait and see. Only time will tell. But keep an eye out on this level here at around about the 41,100 and 41,300. Should we get past the 50% Fibonacci level here where we're currently at around about the 40,600. The main thing I want you to be aware of and to take away from this video is that we are currently in a bear flag. So if you take the line from the 69,000 that we've had here, this is the bear flag here. And the bear flag is obviously more inclined to the bearish side. Then the chances are we're going to break somewhere along the line. We may have another rally to go up anywhere around here. But eventually it can break either from where we are or further up over here. But the higher inclination, the higher affinity of the outcome is to the downside. And the reason why this development here is different from this development over here, because many people have asked me what is the difference between these two, because this one broke up. Quite simply, this is a bull flag. And this had a higher propensity to break to the upside, which is exactly what we did. And it gave us this rally up here. So the bigger picture really here is that this played out as it should have done, i.e. to the upside, because it was a bull flag. And this being a bear flag, will it play out to the downside which is what we would expect it to do. And that may take it either now or towards the end of this year to the 200 simple moving average on the weekly chart. And for me, this is the most important moving average of all of them. The 200 simple moving average on the weekly chart is exactly where we found support at the end of every bear market that we've had. So currently, from where we are, this line is at around about the $21,000, $22,000 mark here. And this is one of the reasons why I'm not expecting at the end of this bear market for the price to be much lower than the $21,000, $22,000 mark. As you can see, we wicked down here in the COVID-19 situation, but this was one-off and we have to really discount that. But over here, we found very strong support right on the line and we wicked down a couple of times here, but not by much. So if history is to go by, then we won't be going very much further than the $20,000, $21,000, $22,000 mark if the price should come back down currently. And as you can see, the line is a rising line. And as we go on in the following months, this line is going to get higher and higher. And that's why my narrative has always been that if we do come back down at the end of this bear market, more than likely we're going to have a confluence around here, which is what I showed you in the last video as well. Okay, finally, I just want to make a personal announcement. I'm very sad to announce that due to unforeseen circumstances in the last few weeks, this will be my last video for the foreseeable future. It could be a few weeks, it could be a few months, or even longer. I really don't know, and there is a possibility I may not come back. But before I go, I just want to take this opportunity to say a huge thank you to all of you for subscribing to the channel and listening to me and my perspective on Bitcoin. A special mention to all those people who leave wonderful comments in the comment section, and I can tell you it is because of you I've had the inspiration to carry on for so long. And just a final word on my favorite topic, as you know, is personal development. And before I finish this video, I want to just urge everyone to please work on yourselves to create a happy and successful space for yourself and for others around you. And my favorite quote of all time has to be that to have more in life, you have to become more. And people always ask me, what do you mean by becoming more? And I've always given them the same answer, and I hope you'll be able to benefit from this answer. And that is that we must always develop an unshakable positive mental attitude. And with that in mind, create a social circle of people who are going to support and encourage us all to achieve our vision of life, our goals, our objectives. And I would always urge people not to waste your time on negative people who are not on the same page as you in terms of a vision for the future. And always remember that you'll always enjoy life far, far more by constantly trying to improve your health and fitness. And we must always keep our eyes open for any financial opportunities which are abundantly out there, which will open up doors which otherwise would be closed to us. I do wish everybody all the best regarding Bitcoin or the altcoins if you're into them. And I'll finish on that note. Thank you very much indeed for watching. Until the next time, whenever that will be, take care of yourselves, stay safe, bye for now.